Welcome to the Private Lending Insider Podcast, where we offer education, expert guidance, and access to reliable private capital, empowering real estate investors to successfully develop affordable and workforce housing. As a result of the education and expert guidance shared on the Private Lending Insider Podcast, real estate investors, developers, and entrepreneurs gain fair access to reliable private capital to fund their profitable investment properties with greater ease, enabling them to earn the income they desire and live the lifestyle they really want. For continuing education and access to private capital, visit chamblissmortgagecapital.com after the podcast. Here's your show host, founder, and CEO of Chambliss Mortgage Capital, Mr. Randy Chambliss, the private money lender expert.
What up, everybody? Happy Thursday to you. I'm Randy Chambliss, the private money lender. As a result of what I do from the education, expert guidance, and private money that I lend, real estate investors, developers, and entrepreneurs all across the country get fair and equitable access to the capital they need to fund their profitable real estate deals. So listen, I am super excited to be here with you today. And today we're going to talk about a topic that most people want to know about, right? Now, this is geared towards getting prepared for 2025. Listen, the clock is ticking, ladies and gentlemen, as 2024 comes to an end. So whether you are a seasoned real estate investor, a community leader, or someone driven to make a positive impact, this transformation, right, this transformative training that I'm getting ready to give you today is designed to empower you and your family with the tools, the insights, the resources, and strategies you need to achieve a quantum leap towards your 2025 goals, right? Whether they're financial goals or real estate investing goals. So what are you going to get out of today's training? Right here is what you're going to learn. You're going to learn, number one, how to secure private money for investment properties to scale your vision. Number two, you're going to learn the state of the housing and financial market in America so you can stay ahead of the market trends and all of the challenges that comes along with it. Number three, I'm going to be sharing with you the 4 critical underwriting C's to unlock the secrets to guarantee a private money loan approval for your profitable deals, right? Now listen, this isn't about real estate, right? It's not all about that. It's about real impact in our communities, right? You're going to walk away with actionable insights and practical strategies that you can use right now, right? Not next week, not 2 years from now, not information that's outdated, right? I'm talking about right now that you can use to be able to start to build your wealth, build your credit, and just truly make a difference in the lives of others and in the lives of your family. Listen, so be a part of Chambliss Mortgage Capital ambitious initiative, right? That's aimed at empowering investors, individuals, and families to create financial well-being, and more importantly, finding investors, helping investors to be able to better create more affordable and workforce housing, right? So that is the big thing we're going to talk about today. So listen, let's jump into some good information. So hold on a second. Let me pull up my slides, ladies and gentlemen. Hold on for a second. So we're going to be talking about Chambliss Mortgage Capital and how you can actually plug in to make a big difference in your house. So here's our circle of wealth, right? Discover the financial well-being and freedom with our circle of wealth system. We provide financial education and services to better help you achieve and grow your wealth through real estate investing, right? So let's dive into some of our brands, right? So we have Financial Success University. It starts with literally that. It starts with Financial Success University to be able to give you the education, the financial literacy, and give you the guidance you need. Then it goes to UE, right? United Wealth Education. That's the platform that we've used to be able to help thousands of individuals build their credit, organize their finances, and to be able to protect their financial wealth We're able to help thousands of individuals to get in homes, right? Be first-time home buyers. So we have the financial tools inside of the system. Then we have United Credit Education, which is literally a nonprofit that's for the last 20 years been helping individuals delete those negative, outdated, inaccurate items off their credit report. And then we have Geneva Financial, which I'm a branch manager of. My wife is a branch manager of. And that gives us the tools from the FHA loan, conventional loans, VA loans for individuals to become homeowners, right? And then we go to Chandler's Marcus Capital, which is private money for real estate investors, right? So that's that circle of wealth system that we talked about. So in order for you to be an investor, right, you have to what? Already have your finances in order, have a good financial education, have been already to built your credit up already. Those things already should be in place before you become an investor, right? And so we want to make sure that you are in a good position. So listen, here's some of the trainings that I've done in the past. Now, I've done countless first-time home buyer classes, countless real estate and investment classes, credit education classes, right? Mindset, personal development classes. Listen, I could have photos on here for days, right? But I don't want to bore you to death, right? So at the top left side, you will see a group of individuals actually at a church, right? The church had a financial literacy program that asked us to come in and be able to help. So we had a good 40, 50 people. You'll see me sitting down on the right-hand side. On the top right photo, you'll see me at a title company, right? Teaching the community. In the middle, you'll see me at a hotel room. Again, teaching the community, individuals and families to be able to get their finances in order, etc. Then on the bottom left is actually a group of real estate investors. Some of these are real estate brokers, some of them are real estate agents, and some even became real estate brokers and agents and investors out of this class. We did multiple of these classes. And then at the bottom right, you'll see me actually in the field where we had some bus tours, where we're driving around to different projects that we was doing, from startups, from new construction, where we just had the dirt and we're just putting the pilings down. The students able to get to see that, till we have the homes already framed up like you see right now, but it's still no drywall on the inside to the finished product. Like we drove around in the bus to be able to look at all those projects that we had currently had going on at that time, right? So I've been doing this a long time, ladies and gentlemen. Matter of fact, I've been studying financial literacy, teaching financial education, and actually applying what I learned over the last 20 years. I purchased my first home and my first investment properties 18 years ago. And for 16 of those years, I've been a licensed mortgage loan originator, and I've helped countless of first-time home buyers get the education and the money that they need to buy their first home and to be able to purchase their forever dream home. From that time to this time, I've helped countless real estate investors get fair access to the capital they need to fund their profitable deals. From that time to this time, my wife and I, we probably purchased, rehab, and sold over 20 different properties, built 3 or 4 new construction from the ground, sold them, and been involved in many, I would say countless heavy rehabs or new construction projects that we manage, right? So I stand here today and tell you I've seen a thing or two over the years, so I know a thing or two, right? So in all due respect, just to be humble, right? Not to be boastful, but I'm damn good at what I do, right? So that brings me to why I started Chandler's Marcus Capital. So first, who is Chandler's Marcus Capital? Well, CMC is a direct private lender for real estate investors, right? Recognized nationwide for its reliability. CMC is funded by a leading national private credit fund that has funded over $10 billion over the last 10 years in investment properties alone. So what are we fighting against? Like, we have a social cause. The more money that we earn, the more money that we give back, right? And so we are literally working with good human beings who want to join the fight against financial insecurities and homelessness. So think about this. Financial insecurities affect millions across the United States, especially Black, Latinos, women-led households. As housing costs continue to rise, the need for affordable and workforce housing has become more urgent than ever. Chandler's Marcus Capital, we are on a mission to empower individuals and families with financial literacy, financial resources, and to achieve the financial well-being that they deserve, all by empowering real estate investors to be able to create more affordable and workforce housing. So we have one, advocacy, right? We are actually advocates behind insecurities, financial insecurities, raising awareness. We want people to be aware of these things that's going on, right? So let's look at some of these insecurities. Let's look at some of these unfair economic opportunities that's out there. Number one, according to the Small Business Administration, SBA, you already heard that name before, right? 80% of small business loans were denied by traditional banks in 2023, highlighting the need for alternative financing. Think about that. 80%. Now, for businesses that was minority owned, that percentage is actually higher. Think about that. Unfair economic opportunity number two, that's nearly about $87 trillion combined in capital, venture capital companies, and also private equity firms combined. $87 trillion that they have. Out of that $87 trillion, about 1.33% of that money is reinvested to businesses that are started and ran by people of color and women combined. Now, women make up the majority of the population, and at least bare minimum, people of color make up at least 13+%. But combined, only 1.33% of that money is invested in it. Now, here's what I want you to think about. I want you to get this point, that the biggest investor to these mutual funds, to these private credit firms, private equity firms, to these venture capitalist companies, the biggest donor or the biggest investor and donor is public employee pension systems, right? Public employee pension systems. Now, you all may know somebody in your family, you yourself might work for the state, federal, or local government. You might be a teacher, know a teacher, a firefighter, a first responder, maybe it's a nurse that's working in the hospital. And every time they earn a paycheck, a portion of that money goes to their pension plan. And so aggregated, this pension plan money is invested to bear what? Turn a profit, to create a return on investment. So in the future, they can have a decent retirement, right? That's the goal. So the question is, are we begging for money that we're not supposed to have? And the answer is no. We only want fair and equitable access to the capital to be able to go out and build businesses, to go out and live that American dream, to be able to lower our taxes, right? To be able to generate more jobs, to be able to slow down or even stop the crime in our neighborhoods because of the lack of opportunity, economic opportunity, or job opportunity. That's all we're asking for. We're not begging for nothing. We don't want anybody to be philosophical towards us, right? Only thing we want is fair access to the capital, right? It's your money, it's my money. Give us fair access. Now think about that for a moment, right? Let's say that you are starting a race, like you going to a vehicle, a car race, and it's the Indy 500. The Indy 500, you're starting this race. You have the same vehicle as somebody else, a 2025 blue Lamborghini, right? Souped up, the most amazing machinery there is on the planet. Both of you and the other driver are skilled, trained, and developed. You're passionate and committed to what you're doing, but yet the other driver start on lap 400, right? And you start at lap 0. Is that fair? And is that equitable? And of course, we know that answer is no. So let's think about this. Let's put this into perspective. $87 trillion, right? Let's look at just $1 trillion. So you look at my photo, you see that airplane on a soccer field. So $1 trillion is going to actually go across this whole soccer field, bigger than an airplane. So imagine $87 trillion. You see the disparity? So that's why I created Chandler's Mortgage Capital. I just thought it made sense for real estate investors, developers, and entrepreneurs to be able to have fair and equitable access to private money, to private capital, so they could go out and create more affordable and workforce housing, right? So we cannot rely on the federal government to make this happen. We are in a housing crisis right now. We can't rely on the state, the local governments. We cannot rely on the city council women, city council men. We can't even rely on them because oftentimes they are not real estate investors. They're not developers, right? And so we can't rely on the traditional banks. The traditional banks, they have what we call REOs, real estate owned, meaning that they when they foreclose on a property, when somebody unfortunately can't make the mortgage note, they foreclose and take the home back. But they don't hold it and rent it out for cash flow. It's a liability to them, right? They sell it as an REO, hoping somebody could buy this property. Typically, they sell it at a discount so somebody could take that REO and go rehab it and bring it back to the market. That's what the banks do. So we can't rely on the banks to solve our housing crisis. We can't rely on the city, state, federal government to do that. If we were relying on them, wouldn't this be solved already? Say yes, shake your head. Yes, this will be solved already. We wouldn't have these problems, right? So it's going to take the private sector. It's going to take the private individuals, just like you and I, right? That average person to be able to drive this home, to be able to drive creating more affordable and workforce housing so we could be able to prevent, reduce, and end ultimately homelessness in our community. So that's why I created Chambers Market Capital. So we provide financial private money for investors from fix and flip loans. What I mean by that? Well, I mean, you get access to the capital you need to go and purchase the home, and you get access to the construction costs or the rehab budget. So you can make that home to a beautiful home, whether you're replacing the kitchen cabinets, the kitchen appliances, the floors throughout the house, replacing the air conditioning system, right? Whatever the case may be, that we give you the budget not only to purchase the house, but also do the renovations. We have ground up new construction. For our developers that have experience in building new construction, we have simple common sense loan for developers. We also have what we call stabilized bridge loans. And what that simply means is that the property is already in moving condition. It's already livable, but you need something quick so you can close the property. The homeowner who's selling may be facing a foreclosure. You need to move fast, right? It's a bridge loan. So our fix and flip, new construction ground up, and stabilized bridge loans are 12-month term loans. 12 months, that's it. It's short term. Just to give you enough time to buy, rehab it, and resell it, or buy, rehab it, rent it out, and refinance it. Then we have our long-term 30-year fixed rate mortgages. We call them DSCR loans, right? So what this basically means is that you can have a single family home, you can have a duplex, triplex, and even a 4-unit fourplex, right? That we can fund, and you'll be able to have the capital to buy that property to have that cash flow. Even, I should say, multi-family homes, small commercial buildings as well, and mixed use properties. We could do 30-year fixed rate mortgages. You also have portfolio loans, right? Portfolio loans meaning that you could have two or more homes that could be underneath one loan. Like, for example, we closed a condo association. They had 2 buildings, 12 units, and 12 condos in each building. That gave it 24 units. We was able to close all 24 of them in one loan, right? And it doesn't have to be in the same area, same city. It could be in different locations, different states, right? But the point of the matter is this is commercial lending. I want to be very, very clear with you guys. Chambers Mortgage Capital is a commercial lender. We only lend to businesses, your LLC. If you're a real estate business, we can lend to you. We can lend in 40 different states, right? That's the difference. Our guidelines are different because it's a business-to-business loan, a commercial loan. So that means you can hold title in your LLC name. It won't show up on your personal credit report as a debt. You get the point. So we are based in New Orleans, Louisiana, but by all means, right, we're deploying capital all across the country. So if you see the states in blue, that's everywhere that we can lend private money in, right? That's 40 plus different states, right? So here's like a little example, right? So on the left-hand side, this was the property that one of our investors purchased, right? We was able to fund this deal. So you can see from the left side, the before, and the right side with the after. Big difference, right? They did an amazing job with the rehab. If you see the inside, it's going to blow you away. But I don't want to bore you to death on it, but I just want you to see the potential, because the traditional banks, you can't get this at the traditional banks. Traditional mortgage company, you can't better get that, right? So either you're going to be coming up with all cash, right? Partner with somebody who do have cash, right? Or a good credit line, and you're going to have to split the profits with them. Well, Chamberlain Mortgage Capital, we're not trying to dig in your pockets. We're not trying to split equity with you. We want you to make the money. We fund the deal, you make the money, and you make the community better once you do more and more deals. So this is what that transaction actually looked like. It was a purchase and rehab. The amount that we lent was $168,000. The after repair value was literally at $263,000. I want you to remember these numbers, right? Because I'm going somewhere with this. The after repair value was $263,000. The ARV came to about 64%. We ended up doing an 80% loan of value on the purchase, and we funded the rehab 100% financing. It was a 12-month term loan. There was no prepayment penalty. So once they finished that project, they paid it off, paid the loan off, and there was no prepayment penalty because it's a short-term loan. It just makes sense. And the exit strategy is that they sold the property. So now I want to jump in to some critical tips, right? This is the 4 underwriting C's that you have to know so that you can meet these 4 C's criteria so you can guarantee a private money loan. So this is the 4 criteria used to evaluate every private money business loan application that come through our door. I want to be very clear. So let's talk about this. If you're taking notes, and you should be, I want you to write this down. Number 1 is going to be collateral. Everybody say collateral. Collateral, right? So under that collateral, I want you to write this down. I want you to write ARV. ARV stands for after repair value. What will this property be worth? What can I sell this property for once I put the last stroke of paint on the wall? That's your ARV. That's a critical number for you to know, right? Because if you don't have a target, if you don't know what you could sell a property for, how in the world that you think you can make a profit? So that's the one calculation or formula you should know. So write that down, ARV. Number 2 is your rehab cost. The rehab cost. You have to know what your budget is. Like, what is the scope of work? What is the construction cost? What is that number is going to be? It's going to be $30,000, $40,000, $100,000. Like, you can need to know what that number is, right? That's a critical formula, critical number for you to know. Now, we're still talking about collateral, ladies and gentlemen. The next one is going to be acquisition cost. See, that's a cost to acquiring a property, right? You have lender fees, you have title settlement fees with your title company attorney who closed it. You have insurance premiums you have to pay, flood if it's in a flood zone, builder's risk insurance, right? That's still insurance. You have property taxes that you have to pay, right? Those are the things that you have to be aware of. What is your acquisition cost? Next, I want you to write down holding costs. What is your holding cost, right? If you hold this property for 4 months before you sell, what does that cost? What is your interest-only monthly payments? What is your landscaping cost to cut the grass, right? What is your utility cost to keep the lights, water, and gas on, right? You have to know what those holding costs are, right? And then lastly, underneath collateral, right? What is going to be your selling and or refinance costs? Randy, what do you mean? Well, if you're going to sell that property, that's the exit strategy, right? It's to sell that property, then you most likely may be using a realtor. Well, you have to calculate a percentage of what you're going to pay for realtor services, whether it's going to be 6%, 5%, 4%, you come up with that cost, right? And then also, if it's a first-time home buyer, you might have to chip in just a little bit on their what? Property taxes, title settlement fee, and even the high cost of insurance. They might say, can you help me out? Can you pay for that insurance a little bit, right? And if so, then you have to consider that cost. How much you willing to pay to help a buyer with their closing costs. So that's collateral, right? In other words, do the deal make sense, or does the deal make sense? Is the deal profitable? That's what we want to know. Because I want you to hear this and hear this clear. I'm going to give you a golden nugget right here. You can run with this, right? I want to give this to you. You should not come up with a maximum allowable offer, a MAO, maximum allowable offer to the seller until you know these formulas, until you know these costs, until you know your ARV, your after repair value, your rehab costs, your acquisition costs, your holding costs, your selling costs. Once you know all those, then and only then should you come up with your maximum allowable offer to the seller, meaning that what you're going to pay to purchase the property. Because if you don't know those numbers, you're going to end up, oftentimes, I see it happen all the time, that you pay too much for the purchase. And then you either break even at the end, or worst case, you lose money at the end. And you do that a couple of times, you got that BK coming, that bankrupt. Grand opening, grand closing. We don't want that. We want you to avoid that. That's why we want to help you to calculate profitable deals, right? Profitable deals, at least a 30% minimum ROI on your money, right? So that's collateral. That's one of the critical 4 C's. The next C is character. Character, ladies and gentlemen, write that down, character. So let's put some subtopics underneath character. Number 1, experience of the investor. Remember, this is not consumer loans. We're not lending money to consumer loans at Chandler's Market Cap. This is for business purposes only. I want to be very, very clear. For real estate investment businesses. So you have to have experience if you're going to be a developer to do new construction. If you're going to be a rehabber, you fixing and flipping a property, then you don't need experience, right? But we need you to be in a position that you did get some education. Are you part of a networking group that talks about real estate investment? Are you taking some courses and classes? Are you part of Chandler's Mortgage Capital real estate investment mastermind group, right? Well, in our community, right, you can just go to chandlersmortgagecapital.com, right, and click at the top and say join our community. There's no cost, it's complimentary, and you better get in there. You'll see past trainings that we've done on Zoom in the past. Also, you get access to future Zoom private trainings so you can learn these things in detail. Like, I have limited time to talk to you on the podcast. Right? I can't break down every single detail, right, on the podcast. So you want to have some type of training, right? Now, once you have this training, the next thing I want you to write down is excellent communication. I need you to have excellent communication. Be a good human. Have a good human communication. Meaning that if it's a challenge for my team to reach out to you via phone call or text or email, and you don't respond, then if you're displaying that type of activity before you get money in your hand, how in the world, this is our thoughts, how in the world what would it look like, I should say, once you get the money in your hand that we give you? Are you going to return our calls at that point, right? So we want to make sure that, hey, you have excellent communication, because communication is everything, right? And then reliable. How reliable are you? How honorable are you, right? We want to know your character. And then the third C is capacity. Write that down. Capacity. That's your third C. Capacity. Well, what do you mean? Well, number 1, we want to know what's your available cash that you have to invest. What is your assets that you have, right? Cash assets. Income that you have, right? Are you able to maintain this interest-only mortgage note, or are you able to maintain this? Do you have a lease in place? Do you have a strategy to lease the house? What type of income going to come in from this property that you're buying as an investment? Number 1. Number 2 is, what is your repayment plan? Are you planning on selling the property and pay us back our money, or are you planning on refinancing the property and pay us back? Like, what's the plan to repay? Is the project a profitable, realistic, doable deal, right? Do you have the capacity to run those numbers like we talked about earlier, to know if it's a profitable deal? What's the timeline of the project? Let me give you this nugget. Write this down. for every $10,000 worth of rehab or construction costs, typically that's about 1 week's worth of work. 1 week worth of work. Meaning that if you have a $30,000 rehab budget, you should be finished that project in about 3 weeks, 3 to 4 weeks. If you have a let's say $80,000 budget, you should be finished that project in 8 weeks, maybe 9, depending on the weather. But you get the point. Are you able to finish the project on time and in budget, right? Again, what's the exit strategy? And the fourth C I'm going to give you today, guys, is credit. What is your FICO score, right? What is the reasonable FICO score? So what we're looking at on your report, we want to make sure that, hey, is there any foreclosures that happened to you in the past? Is there any liens on you, any judgments on you, any collections that you have because you're not paying the bills, right? Any bankruptcies yet? Like, we just want to know, okay, what's the character of this person? Let's look at the credit score. And so those are the things that we want to make sure that you are aware of, because if you're able to know what these 4 underwriting C's is, then you can go out there and find you some good deals, right? So listen, next,